What's up, everybody? Welcome to the Dan Dunn Show. So today we're going to be looking at Chegg. They report tomorrow on Monday, the 29th of October, 2018. So we're going to look at Chegg. So far, we've done pretty well on our little analysis. Even if we don't get it right, we've seen to identify what is the big catalyst in these earnings.
We're 2 for 2, bro.
We're 2 for 2, bro.
Yeah.
We are 2 for 2.
All right, so let's start off with the chart. Let's go.
We're going straight to the chart.
Straight to the chart. Let's see it.
So as everyone knows, the market's in a little bit of a turmoil period right now. No one's really sure what's going to happen, whether or not it's going to just fall, or whether it's going to stabilize. We're heading into some sort of bear market. Anyway, so this is Chegg's 5-year. So what I was looking at was that they were losing a whole bunch of money out here. This is 2015. They were losing like $60 million a year, $40 million a year. And then when they cut it to, they only lost $20 million a year. They jumped up, right? They jumped up right here. They were almost profitable, right? They started running up. They raised their guidance. They were going to start making money. Everything's going great, dude. We're about to go profitable. The thing is running. But then the market sell-off happened, and now we're in the same trap that seems to be pretty bold across the board as to what's going on. So chart-wise, I would say that it has no strength, no stability. You could call 1,000 different things in that, but what's important here is not so much that any one thing happened to Chegg. They just had a data breach at the top of that chart, but
that was the catalyst for the drop. I mean, let's be real here. This drop here is on 9/26, and that they dropped 12% that day. And then the rest of the market fell, and so Chegg fell with the rest of the market. I mean, It wiped off a lot of value. It was at like $31, $32. Now it's down to 23.
Yeah, I just don't feel like data breaches are a long-term thing.
I don't think it matters long-term anyway, but they always have a...
Equifax gave away half of America's social security numbers, and Equifax is fine.
But the stock went down because of it. You know what I mean? It will go up over time. I think that's a buy event, I think. That's an opportunity to buy, but it still means that the stock will go down. You know what I mean? It's bad news, so...
Anyway, looking forward into financials, right?
I think the story of Chegg is much more in the financials than the chart.
I don't think the chart's going to tell you much here.
Yeah. So let's just go, as we always do, we will look at first the investor presentation. Now, I'm going to rant about how bad this presentation is after I go through the basics. Let's go down to all the way down to page 12. Because you got all of this garbage in here. I mean, this is trash. Look at all this trash. Trash. And this is marketing material. I don't know what we'll talk about this later. So this is page 12 right here. You're looking at their revenue and their subscribers. Now, I was a subscriber actually to Chegg back in 2012. So I'm pretty familiar with this company, and it grew quite a bit. And you can see here their revenue is definitely taking off. Now, this blue bar here is their textbook services, and this orange bar here is their own services. So it's good to see that they're able to, most of their growth is coming from their own content as opposed to them having to pay licenses to somebody else's content. So that's a positive thing for the company. There's no question about that. And then to get the next piece of useful information, you got to go all the way down to page 18, which is this right here, which shows their total revenue for Q2. 74.2, and then as you can see, Chegg Services 61.8. The Chegg Services is definitely their growth engine. I mean, there's no question about it. It's where all the growth is. Now, what they're predicting for next quarter, 68 to 69.5. So they're looking for a little bit of a downward guidance, but the Chegg Services down again to 52 to 53 million dollars. And total year, 306 to 331. So you can see there what the numbers are. The revenues are solid, but despite having those kinds of revenues, they're still operating at a loss. And you don't get that from looking at their investor portfolio. They only show non-GAAP earnings. It's the worst financial presentation I've ever seen in quite some time, frankly. I mean, it really is probably the worst I've ever seen.
It's sloppy.
I mean, we'll talk. What it shows is that management does not care about the shareholders, and it's something we'll get into in a little bit. I mean, they don't care about the shareholders. Here is their revenue charts again. You can see here, 255. They're calling for 308. this year, which is, that is a nice little bump in revenue. It's a good growth stock. There's no question about it. But they're operating at a loss. And then the number that jumps out to me, again, as they're operating at a loss, is look how much employee shares they're giving out. You know what I mean? They're giving out $12 million in employee shares last quarter. And, if you're talking about, and what's even crazier about that is before, last year when the stock value was like half I'll say half of what it was this year, they gave out $41 million in shares. So they have they have a lot of, it seems that they have a lot of stock that they own to their employees, and they're giving their employees millions of dollars in stock every quarter. And so...
It's part of these people's pay or something.
Yeah, it's part of their pay. And if you're talking about a company that's losing money, that has $250 million in revenue in a year, and you give $40 million in shares to your employees, I don't get it.
What's the difference?
I don't get it. I really don't get it. They lose money, and they give their employees all those shares. I mean, the Chegg is not... after... I was bullish on Chegg coming into this. I'm long Chegg. I have, it is what it is. But after reading these reports and really diving into like how they present themselves to investors,
once you see what these people are putting out for everyone, this pamphlet, right? So this is the financials that are being
this PowerPoint here. We'll put it back up on the screen.
Yeah. So this PowerPoint here. Me just holding it, going page by page, right? We printed it out. This thing's a fucking joke.
This is the most useless piece of financial investor reporting.
This is trying to sell you as a subscriber to Chegg, not as an investor to Chegg.
Yeah,
and they don't tell you anything about it.
And there's so many problems when you read this thing. You don't know where their revenue comes from. You don't know what they're trying to do.
No.
You don't know where the guidance to the company is. They're just talking about all right, here's...
Talking about numbers of people and how long they work.
Large student domestic market opportunity. 36 million students, and Chegg has 2.2 million subscribers. But it doesn't tell you anything about those subscribers from... where are those subscribers from? Why is it 36 million? This is... what this reminds me of? This reminds me of when somebody goes on Shark Tank, and they're like, I want to sell shoes. There's shoes are $10 billion a year, and all the sharks laugh at them because who cares? That's what this is. Who cares? There's other ones on here too. It's just the most ridiculous thing. So unimportant to shareholders. This is a stupid one. Chegg is well known among students. They're 34%, and then Amazon's 33%, and Google's 11%. Come on, this is a joke. This is a joke. And why they put this in the presentation and why they think this is important for shareholders, I have no idea. What's important to shareholders are the numbers. This is an important page to shareholders, and there's only 2 of them in the whole thing. And then they also have the appendix down here. And the other thing that's a joke is that they present themselves as non-adjusted, non-GAAP earnings is what they're saying. Is a $19.3 million winning, but when you put in GAAP, they're losing $20 million. And then you got the appendix down here, which has, it shows their net loss. You know what I mean? There's no... So it's on here. You just got to get all the way down to the bottom through the propaganda.
But it also doesn't seem that they have any debt somehow.
Yes, that's the other...
The debt's missing. We looked at other sites for the debt, and we
I can't find where they're getting their cash from. So let's go to a cash flow statement here.
Which is impossible. They need debt somewhere.
Yeah.
If you're running at a loss for almost 10 years.
So we want someone to explain this to us. So they have no long-term debt. You can see this line here is their long-term debt. They have no short-term debt. Zero short-term debt. And then when you look at their cash flow statement, they lose money. They lose money every single year since 2012.
That makes no sense.
No sense.
And they're giving away stocks.
And they give away $40 million in shares to their employees.
That makes absolutely no sense.
In 2016, last year they gave away like $20 million or something like that. It really is an absurd situation.
It's bad management. It's bad... honestly, this goes well. My opinion here is well past the product that they're putting forward. It's the management that allowed all this to get released in this fashion. Like
whoever put this out,
this is the dude. Have they ever seen another competitor's? Have they ever seen a real one of these?
I've showed this to 3 different people, and every single one of them going through it was like, "Did you print out the right thing?"
Yeah, I didn't think you did. I thought that was like, this is Chegg. This is why you subscribe to us. It wasn't until I actually read the front page where it was the Q2 investing report or whatever, but
disappointing.
Yeah, and
it's disappointing.
These financials, them giving away all these stocks to their employees.
Why they run at a loss.
Yeah, it's just amazing.
Yeah.
And so you put this with that, and you get an idea of what's running this company.
Yeah.
And they have a good idea. They have a product.
But
maybe it's time for them to sell. Maybe like.
I think that someone needs to go into. I don't know who the CEO is. I don't know who the board of directors is, but someone needs to.
Someone needs
just care about the shareholders. The shareholders need more of a voice in this company. I feel, especially now that interest rates are rising, no one's going to accept this company running at a loss anymore.
Dude, they have no debt.
It's amazing, but they still. I mean, let's transition back to the screen real quick. They still have. This is a great gap down in cash in net cash flow. It went from 42 to 20, and you look at the high, it was almost 64. 64.76 was their lowest they were, and is this percent changes or is this total? What kind of chart is this?
But I think that's in billions.
Yeah, or millions or something like that. Yeah, but anyway, it's gotten better. So it's getting better. Although this year it's at 14, so if everything's linear, it's going to be at 28, which is going to be worse. But don't worry, because the employees will get $35 million in stock compensation packages.
Well, they had to pay for the shares this time. The company got more expensive, and they kept having to pay. It's got to be something with these employees' contracts or something. And anyway, so
it's diluting the share price, and it's not good for the shareholders.
No,
you know what I mean?
This looks like it's going to turn into a reverse split, so Chegg can afford to pay these companies.
Yeah,
pay this shit.
That's really not that far fetched.
Yeah, like that.
Although they write the shares for free. I mean, we're the ones who bear the cost. The investors are the ones who bear the cost, because all this, you want to call it a split, you want to call it whatever else, but when you have a market cap of $200 whatever million, or you make $250 million in revenue and $40 million that year you give to employees.
Yeah,
the shareholders are the
joke.
ones. Yeah,
it's a joke. They're running at a loss too, and they're improving their loss. I don't know. It's just a poorly run company.
It's a very poorly run.
This
company.
looks poorly run, and that's really my opinion here. So, and dude, them not really. We had to search for what their outlook on Q3 was. We had to search for. We had to put in an above average effort to go out and find what they were expecting for Q3, and dude, as an investor, you should never have to do that, dude. Companies should announce that to you first and foremost. This is what we think is going to happen.
I can't begin to tell you how disappointing this PDF was. I mean, this slideshow, or whatever you want to call it. I mean, I got to like page 4 and I literally thought I was on the wrong thing. Like, here's another one, right? Here's another one, right? Tutors on demand. Yeah, a bunch of words, bunch of boxes and things. $5 to $7 billion market opportunity, and 60% of Chegg's tutors. You have no idea how much of a percentage of that is the company. You have no idea if that's high school, college, or is it teaching people calculus, or is it teaching kids ABCs? You know what I mean? Who the hell knows?
It's some sort of online.
Yeah, but anyway, the market cap for it is $5 to $7 billion, guys. So let's ride. That's what that says. I mean, that's terrible. It's terrible. I mean, they're pitching the company as if I'm like a what do you call it?
Robin Hood investor?
Yeah, or like those guys like in California, the venture fund. Like, I'm a venture fund capitalist or something like that, and not a common stockholder. You know what I mean?
It's really poorly done. We've sat here and talked about it for the last 5 minutes about how poorly done these reports are.
Every time we sat down to talk about this company, this is always what it comes back down to: is how poor the reports are, how bad the numbers are, and how hard it is to find any information on the numbers. You got to go to these stupid.
This is the most informative thing that they have out. Dude, this is the most black and white, literally black and white, boring ass chart you've ever seen. And dude, this is some young fucking, I'm assuming Silicon Valley fucking thing going on. And dude, this is what they're giving their people, man. Not like, at least put colors in here for me, man.
And it's a great product. And for what I used it for, I used it back since 2012. It was for college textbooks, and it was the best product for college textbooks that you could have bought. It definitely did its job. In college textbooks, it's a good industry. It's very entrenched. You know what I mean? It's a government contract thing where, like, I think Pearson and McGrail or whatever that other one is, they own the whole industry essentially. And it was like a $30 a month subscription or something like that. And you get all the answer keys and questions, and it was just everything that you needed. And it was a really good service. And
there was a place in the world.
There's a place in the world for it. This is definitely a disruptive company if it's run right, though. This is a company where it was born in low interest rates with poor management, but with interest rates rising, and it looks like they're not going to stop rising.
But they have no debt.
Yeah, but they have debt somewhere. Somehow they're losing all they have to start making a profit of some kind. They cannot afford to be unprofitable any longer. So That's Chegg.
Yeah,
I mean, there's nothing.
it's amazing. It's amazing. So, yeah,
Let's look at the CEO stand. Let's pull a picture of him up because I feel like it's important to call out to give credit where credit is due. Let's see who it is.
credit for what? Dan Rosewing.
Dan Rosewing.
He's got a cool name.
It is a cool name, isn't it?
Dan Rosewing.
So here is. Oh, it was a startup. This guy, typical startup looking guy, right? Let me center this a little better for you.
Just pull up another picture.
Ah, that's cool. They got it. So this is the CEO, Dan Rosewing. He looks like a guy who understands it's important to turn a profit, though.
Also looks like a guy who would know that something like this isn't acceptable.
Yeah, he doesn't. It's not the kind of startup I would have thought. He's not a Mark Zuckerberg startup.
No.
You know what I mean? This is definitely some institutional investor looking guy. So
he's not an institutional investor.
Here's them opening the bell. Oh, they're on the New York Stock Exchange. That's cool. So they're not part of the Nasdaq then.
I didn't even check.
Yeah, I didn't even check. Yeah, who cares?
Yeah.
Doesn't matter. So Chegg, they need to start turning the profit. They need to turn cash flow positive. And please, for the love of God, look at who had a really good investor report that we looked at last year. Tesla had a good one.
Yeah,
Tesla had a good PDF.
Tesla had colors in there. They had slideshows. Tesla was down with it, dude. Tesla was getting ready to kill the fucking earnings report.
Tesla's made it very. See, what you need to do in these things is you need to make it very easy to understand what's important to your company.
Explain to me like I'm 5.
Yeah, explain it to me 5. What is important for your company to go up or down? What is important? What are you trying to achieve? Amazon, number one thing was cash flow. Tesla, the number one thing was like production. Your number one thing, learning student first connected learning platform improves student outcomes. I don't even know what that sentence means. Right? It's not even a sentence.
Learning student first connected learning platform to improve student outcomes.
Not a sentence.
Yeah. Why don't you say student a few more times?
Yeah, or leading and learning. Yeah, just keep adding those key words in there. Yeah, keep flashing your crap. Competitive moat given brand, reach, data, and proprietary content. Congratulations, bro. You played yourself.
Yeah.
Yeah. Good.
Chegg at a glance.
Yeah. This is, yeah.
Largest 16 million high school users versus 20 million university. Just the whole thing's a joke.
This whole thing is a joke.
The whole thing's a joke. And honestly, when we got into the other ones, like we got down into it and we started seeing like a picture of the companies and like, oh yeah, this is cool.
Makes sense.
Yeah, right? Dude, you get into Chegg and it just dude, what? Yeah, like
they gotta care more about the shareholders. They gotta do a better job of presenting the shareholders.
Dude, they can't be giving away fucking all these stocks.
But you know
who the shares.
You know who the stocks are going to now, because I'm gonna tell you what. This guy here looks like he can use a few employee compensation packages. He looks like he enjoys his employee compensation. So that's Chegg.
That's Chegg.
Yep.
Are you bullish or are you bearish?
I was I was up on this stock.
Yeah.
You know that I made good money on this stock. I was in it for a while because I liked it in college. Is really what it was. And it really spiked this year. It went down because of the data breach, which is a non-story. They will recover from that. But I think that now more than ever, it's important for them to turn a profit, or at least get their cash flow in the way of going to a profit and really improve in that area.
Mm-hmm.
But long term, I'm positive on them. I think it's a good product and a good market, and they have first mover advantage. But I really would like to see some better signals that they care.
Dude, I couldn't agree more. Dude, I don't know a lot about Chegg. Like, I've never used their service. I only really know them because I've listened to you talk about them for such a long time. And, dude, when I read this, dude, I was just like, what the hell am I reading? Nothing's coherent here.
It's just not organized.
No, it's
no
not,
direction.
Yeah. And there's no outlook. No outlook. We had to search in another spot for the outlook.
Yeah, it's just
and and another thing that I saw was in the first quarter they already had negative 14, whatever, if it was millions or billions in debt.
Yeah, millions.
It was millions, yeah. And,
cash flow negative.
Yeah, they were already 14, so they were on pace for a 28. And dude, last year they were 20, so it looked like they were going to run it higher over next year. But long term, I expect the trend to continue, but it's really sitting more on the market as far as the charts that stands. It's really more on the market here. No one's gonna put all their money into Chegg tomorrow or the next day,
Mm-hmm.
So do I think they'll do well? I think that I don't know.
I don't have any feeling for this as an earnings
Yeah,
play.
I don't, dude. I would just, for an earnings play, man.
I
I'm
would
not,
step away.
I would, dude. Let this fucking show unfold for you.
Yeah.
But
If they're not cash flow positive, or if they're worse than their cash flow, need to borrow money or whatever, it's dumb. I mean, it's really good. It's gonna go. It looks like a $5 stock if you look at the chart.
it looks like, dude. If
Yeah.
you read this stuff, it looks like a $5
Yeah.
stock too.
Why don't they give more shares to the employees?
Yeah, it looks
Let's
like-
start with that.
It looks like a stock that is going to have a pop up to 30 and is going to fall back down to 10 for the next 5 years.
Yeah.
I mean, there are so many stocks that do that, and it looks like Chegg might be another example.
I
And
just-
if the market collapses, that's what's going to happen.
I'm just gonna show it one more time. I mean, we're in the 20th minute. I guess we'll stop.
Yeah.
We'll stop. All right. Well, thanks for watching.
This is the Dan Dunn Show. We're kind of bearish, kind of bullish on this, right?
Yeah.
I don't think long term this company is going to stay together like this. But
No.
dude, really, all you got to know is that Chegg, as the company, when you get inside, is a joke. Anyway, this is the Dan Dunn Show. I hope you enjoyed. That really wasn't the best. We're 2 for 2 though. Have a good night.